Good morning, ladies and gentlemen. I'm glad we have a full house again, and Ukraine continues to attract investor interest and remains on your map. There are certainly many opportunities here to make solid and profitable investments, also sometimes at a little bit higher risk than in Central Europe. We have put together a program that will help you analyze all those risks and opportunities and make qualified decisions. Over the past 2 years, we have seen extremely good opportunities in the Ukrainian Eurobond market. Last year, Ukraine sovereign Eurobond market was one of the best performing in the region and in 7th place out of 55 countries in the EMBI global index with a 24% average return. Despite that performance, there still remains a lot of upside for yield compression. We estimated at about 150 basis points where the yields could compress a little bit further. Over the last 3 years, the size of the market has also increased substantially, overall about 2 times, and the sovereign outstanding by about 3 times. And Ukraine moved from 20th place to 10th place in the EMBI global rankings. This year we expect sovereign issuance at approximately the same level as last year, and so far with yields below a year ago. The same is the case for the corporate bond market, which has been idle for the last year and a half. We expect the heaviest issuance this year. So far, Ukrexim has launched a 5-year bond, and there's much more in the pipeline to come. Corporate Eurobonds have had also very good performance last year, on average the same as the sovereign, about 24%, but there have been many outperformers, especially in the agricultural sector and some of the banks. You will read about this more in the strategy reports, but we still estimate that there is quite a good potential for yield compression in many of the corporates, and we see investors refocusing back again at the local currency bond market, thanks to lower devaluation expectations. Now moving to equities, the equity market has been on the other side. It has underperformed quite substantially. Any other market in the world, we are down 60% based on the UX index, and a little bit better based on the KP Dragon index, which includes some of the Warsaw Stock Exchange and London Stock Exchange listed names, especially the agri stocks have helped. But even that index lags the frontier markets and Ukraine Eurobonds quite substantially. And that is and the frontier markets themselves have underperformed over the last 4 years any developed or emerging market by a wide margin as well. This is something that we have looked at last year as well. The Ukrainian market is usually quite volatile, and last year was the first one when it ended up within the ±40% range. Before that, substantially higher moves were usual for its annual performance. The local index UX was down 36%, and the KP Dragon index, which includes the agri stocks, was down marginally. So we are hoping for an improvement after these 2 very bad years this year. The valuations remain quite good compared to long-term averages and give us good fundamental value.